This is the Weekly Outlook. Thanks for joining us at xim.com. Business surveys and one central bank meeting will keep investors engaged this upcoming week. I'm Christina Marujos. Joining me today is our senior investment analyst, Marios Hadjikyriacos. Marios, let's start with the United States. You have been saying for some time now that maybe we have entered the final act of the dollar rally, and the dollar moves we saw this week resonate that. Wednesday now will be quite important for the United States. We have business surveys for November coming up, followed by the FOMC minutes. How could the dollar perform?
Hello, Christina. Well, the dollar is at a crossroads, I believe, right now. So the way I would characterize it in a nutshell is we're probably in the final chapters of this rally, but we might see one last hurrah, right? So I think that the rally is almost done, but not quite. So what did we see lately? We saw US inflation cooling down a little bit, and that sparked a massive retracement in the dollar. The dollar is trading as if the war against inflation is about to end, but the bond market, for example, suggests that it was only a minor victory, what we saw with inflation. Inflation is still running at almost 4 times the Fed's target. And the labor market is still in good shape. Consumption in the US hasn't slowed. So it's premature, I believe, to be trading a Fed pivot. Yes, inflation might have peaked, but we don't really know how quickly it's going to come down. And the Fed has been adamant. Even after they stop raising rates, they'll probably keep them high until they are sure they've won the battle against inflation. So this coming week, we're going to get the business surveys from the US. Those are going to be crucial. How are companies seeing inflationary pressures? Are companies still concerned about a recession coming closer? That's going to be a key part of the narrative around the dollar moving forward. And after that, we're going to get the minutes of the latest Fed meeting. Now, the minutes are outdated because this meeting took place before the inflation report, and we've heard from every Fed official since then. But the market always finds a way to react to this release. I think that the message in the minutes is going to be one of determination, that they are still resolute in getting inflation down, and that could give the dollar a small boost. But the overall picture, Christina, is what I described in the beginning. I think that we are likely to see one last push in the dollar rally, but I also get the sense that we are close to the end of it. If I had to put a number on it, I would say we are more or less 80% of the way there in the dollar's rally.
I see. Now, before we look at other economic data, let's turn to the central bank front. The only meeting we have on the agenda this week is that of the Reserve Bank of New Zealand. Markets, of course, are split whether we will see a 50 or 75 basis points hike. To be fair, the RBNZ has refrained from being too aggressive so far. So could it change its stance this week, given that economic indicators out of New Zealand point to an extremely hot economy?
I think so. So the market right now is split between 50 or 75 basis points. It's basically priced like a coin toss. So I'm leaning towards a bigger move, right? The market thinks the RBNZ is going to be cautious because they haven't done 75 basis points so far. And we've seen many other central banks, in Australia most notably, slowing down lately. But I think that's not going to be the case in New Zealand. And it really comes down to the data, right? So since the latest Reserve Bank of New Zealand meeting, we got data showing that inflation was much hotter than the central bank expected. The labor market is on fire. The unemployment rate is close to a record low, even as labor force participation is hitting new record highs, right? And surveys of inflation expectations have risen. That suggests that inflationary pressures are becoming entrenched in the economy. Wage growth is accelerating. Now, of course, not everything is rosy. We have risks as well. House prices are falling very quickly. We have the sharp slowdown in China's economy. But most of the evidence points to a 75 basis points rate increase. Now, if that's the case, that could boost the Kiwi, the New Zealand dollar. But even if we only get the 50 basis points move, the smaller move, I think it's going to be accompanied by a very hawkish language, right? And that could limit the losses in the Kiwi.
And finally, Marios, we'll also get business PMIs out of the Eurozone and the United Kingdom this upcoming week. Forecasts point to further contractions, though. So what could that mean for the euro and sterling?
In a nutshell, it's bad news, right? So both the Eurozone and the United Kingdom are either in a recession already or they're heading directly for one. That's what the business surveys have been saying for several months now. Now, look, the outlook for the euro has become slightly better lately. We've seen sharp declines in energy prices. That means that the recession might not be as brutal as we initially feared. That's good news for the euro, but not a game changer, right? What I would like to see for a sustainable rally in the euro would be either signs of improving growth or good news from Ukraine, neither of which is on the table right now. For sterling, I think the outlook is even darker. So the government and the Bank of England both expect a recession, and we got the austerity budget this week that will probably deepen that recession. And of course, we've got the twin deficits. Those mean that the pound is very sensitive to stock market sentiment, and I see the risks around stock markets as tilted to the downside. So I see a quite gloomy outlook for sterling.
Marios, thanks so much. This was a weekly outlook here at xm.com.